So if your credit score starts with a 400, a 500, even a 600, in the next 30 minutes, I'm going to show you how to be able to increase that credit score, to fix that credit score within the next 3 to 6 months, right? This is for people that if your lender has already come to you and they've told you that you need to come back later once you work on your credit. This is for that comeback story, right? Like you had something that happened in life, maybe a divorce, maybe that was, COVID, for example, working with a lot of people that are doing COVID right now. This is who you need to do, right? This is what you really need to be working on. And then if you're trying, like you're a business owner, you're trying to start doing that business credit, start doing to leverage your personal credit to be able to get business funding and things like that. All of this is going to be for you guys. And just so you see it, right? So this is the Score financial method, right? This is the Score method, how I call it. This is the exact same way that we're able to use even for myself back when I used to have bad credit about 6-7 years ago. And then obviously we have kept it improving and we've been working on it so much. But yeah, with this, using this exact same principle, we're talking about 779 plus lives that have changed using this method since I've been doing this for the past years. That's equivalent to 2,000 plus deletions across the tri-merge credit bureaus. That means collections, charge-offs, bankruptcies, you name it, late payments and stuff like that. So all of those things. And then this has also helped for some business owners to acquire $500,000 in funding plus, and the ones that we're working as well, right? So just so you said, I don't want to bore you with just like little stats and things. I just want to show you also some of the 779 plus life that we have helped, right? You can see this is this is my friend JC, right? It's one of our customers. We started working into his stuff about 3-4 months ago, and then he wanted a Tesla, right? Like he was one of those things that he really wanted to. And then this is also Monica, right after we fixed her credit and we're able to give her the car of her dreams. Okay, and then yeah, let me see what else I have here for you guys. I mean, this is Abel, another one of our customers. Is actually a video. I don't want to put a whole video here for you guys, but yeah, that's a video testimonial. This is Ariana, this is a video testimonial as well. This is Vanessa, another video testimonial. She is a mortgage broker that we're really partnered with, and her testimonial is about how we help the customers that she sends over to be able to acquire their mortgages, right? So in Score, what we do is that we focus a lot into how we're able to get people into their, how do we call it? Let's make it very goal driven, right? So this is why we like to have strategic partnerships as well. So that way we're able to get the goal that they need. For the customers that Ariana sends our way, these are gonna be people that are not mortgage ready. So we've been working with her for many years, and the whole goal is, right, somebody comes with low credit score, how can we get them mortgage ready, right? Whether it is a 580 for an FHA loan, right, a first time home buy, or if we need to do a refinance, or if we need to do maybe a HELOC, right? Those are the type of customers that will work specifically. So we work very specifically and very tight with them, because a lot of the customers that we work with, right, how I mentioned in the beginning, they're gonna be either to be able to purchase a home, right, to get them mortgage ready, how I said. At the same time, we're gonna be working with that comeback story, how I like to call them, right? I had bad credit a couple of years back. I already changed my life. I'm making enough money. Everything is great, but then those mistakes or whatever happened in life, it's still attached to my credit reports, and it's just dragging me down and it's not letting me be, right? So all right, so let me see. These are a bunch of other kind of like score changes that we've done, right? This is a 640 into a 720 all around. 100-point increases here. Let me see. These are ups. Whoops. These are some negative accounts that we've removed across all these times, right? Items deleted all across the 3 credit bureaus. How I told you, there's some cars that some of our customers have gotten. Let me see. This one is for the business credit side, right? These are for the business owners once they start leveraging their personal credit to be able to get business credit cards. You guys probably have heard it. That's the credit card stacking sequences and stuff like that. So this is somebody being able to get approved for $18,000. Let me see. This one, it's $8,000 that they were able to get right here into the credit card as well. Let me see. These are more like closings, right? This is a realtor that is partner of ours as well. So you'll be able to see all of that. And then this one, oh man, this is a great story. Probably you guys, I'll be able to show this video maybe later, or if not, you guys will see it somewhere in my profiles as well. but these are the ratings. This is a crazy story with the ratings. They really told them that they were never going to be able to purchase a home. This was maybe like, what, 6 months ago. And then this is them giving me a full confirmation that they were ready to move on Saturday the 13th, that you guys see. And that was actually this month, right? So this was in June. Yeah, we're in June. So yeah, June 13th, they were ready to actually move into their homes, and they FaceTime me. It was a whole emotional moment. It was really cool. But all right, so I could talk for days for all the type of changes that we made and all of those lives that I'm telling you, but I wanted to show you some of the things that we have worked in the past to make sure that you're able to make something happen, right, out of this. So who this is for, right? How I mentioned in the beginning. So if you're a home buyer, okay, that it's either renting and you want to be ready to buy within the next 6 to 12 months, and then usually you already give it a try and the lender told you, hey, you're not ready, you need to get either your credit fixed, or we need to work a little bit in your credit to give you better rates. This is who this entire system is for. Then we also have, right, we have 3 specific avatars that will be able to work in this system and specifically triggered for it, right? So the entrepreneur, right? So these are business owners or maybe 1099 businesses as well, that the banks have denied them funding, whether their personal credit is still being the main thing that is dragging them down, right? Or they just need to continue building their personal credit in order to have access to what the business credit side is. Okay, and then how I told you a little bit as well, they come back, right? Either life happens, whether you're divorced, maybe some medical issues, maybe you lost your job, and you know something happened that let your credit be able to just tank fully. And now, even though life got better, everything got better, because the life of a negative item inside of a credit report is about 7 years or so. That's just, obviously that changes with them depending on the state. But what happens is all of that still drags around inside of your payment history, your credit history. So we're able to leverage and fix this system, right? The score system, to be able to make that happen, okay? So who this is not for, okay? This is fully honest work, right? So it's not gonna be a magic thing. We use the Fair Credit Reporting Act and a lot of laws that were enacted in the 70s, 80s as well. So, you know, this whole process, right? If you're somebody that is thinking, hey, I wanna get it fixed overnight, I want a full credit sweep, how it's called in the industry, where somebody deletes my social security number from the systems and it's like I'm a ghost and that doesn't exist, which, one, that's crazy if you're really thinking about making that happen. Two, how can you get any type of funding if you can even prove that you exist? Right? So those are things that whenever it comes into the industry, sometimes it baffles me because it makes no sense. Okay, so if you're thinking of an overnight fix to get a guaranteed score, that's not the way that credit works, right? Whenever you ruined your credit, or whenever your credit happened, your life happened, it wasn't a 30-day thing, right? It was more of like, okay, you get a 30-day late, maybe 60, maybe 90, then 120, then it goes into collections, right? So all of this is a monthly cycle. So it didn't take you 30 days for you to get the credit bad. It's not gonna be a 30-day fix, honestly, right? Even though sometimes it will happen, right? Especially for customers that have had a payment history and they're like 6 years, 5 years, and everything is kind of like on the limbo for multiple years. Those customers get really crazy results, okay? And I can show you some of those results later once we're here, but it's crazy. It fascinates me because sometimes those customers 30, 60 days and they're cleaned out, and then they get 100 to 100 point changes and everything is pretty much fixed after, okay? So, Eric, how I told you, everything we do is based out of factual disputing laws and stuff. So if you're thinking of like a shortcut and things like that, this is not for you. If you're not willing to build no credit, if you don't want to build positive credit or anything like that, some of the best ways that I can explain this to you guys is, if you think about it, if you're driving, right? And then you have your credit reports the car, and then you have your brake on the pedal, the pedal brake. So there, the brake is pretty much what all negative items are, okay? So that's pretty much what is holding you from moving forward. The gas pedal, it's going to be the positive line of credits that you have inside of your credit reports, right? So even if you do the SCORE method, even if we get into working, whether you do it yourself, whether you do it with anybody else, right? if you're not able to continue building positive lines of credit, even if we clean everything out from your credit reports, if we don't put the foot in the gas, that car's not going anywhere, right? So start thinking about it that way, right? So if you're not willing to like build credit, then the system is crazy, right? Because in order for you to get credit, you need to have credit, because nobody will give you credit if you don't have a credit score. But if you don't have a good enough credit score, nobody will be able to give you credit, right? So it's a whole thing, right? It's a cycle that you need to work around it. So at the same time, you know, if you are not like goal driven, if you're not willing to like do something midterm, long term, this is not going to be for you, because this is not going to be, again, that quick fix. It's going to be maybe within 3 months, maybe within 4 months, when customers are able to get all of that done. Okay. And then, you know, if you really don't want someone to give you like full information, if you don't want someone to guide you, to teach you, if you don't want someone to kind of like just mentor you into how to be and how to build credit and understand credit, definitely this is not for you. Okay. So it's funny because I was talking to my team and they were like, wait, why are we doing this? Aren't we the ones that we're supposed to like, isn't the service to fix credit? But you know, that's why I wanted to do this free training, because you know, the whole goal, right, especially when it comes into the credit industry, is that credit is a trust business. Okay, people get bummed out, people get scammed. There's a lot of false promises, and by me giving you this system, I want to be able to give what I wish I would have had multiple years back, right? Something to take me from point A to point B, point C, point D, to be able to just get all of this done. Okay, so you know, the usual, and it's funny because I've been doing this way too long. I'm probably giving out my age by giving this thing, but the old way of doing things, like the usual credit myths, like the DIY stuff that you were heard about, especially somebody told you like just wait 7 years and things will come off. Yes, you can do that, but you know, there are better ways for us to be able to do that, all right, to be able to fix it. So, you know, a lot of the scams, how I was telling you, you know, there's no clear thinking. A traditional credit repair company, what we'll do is that they will just send disputes, for example, and then just remove negative information, and that's it. Their job is done. With the score method, we're gonna make sure that you're ready to be funded, right? That you're fundable, whether that is to get a house, whether that is to fund your business, whether that is to get a car, whatever you need, right? Some of the examples that I showed you guys, okay? So here's where the Score Pro way comes into the play, right? The score method, how I call it, it's we do an audit, we dispute, we build, we fund. All of these things are specifically towards the goal that you want to achieve, right? So, you know, and this is, yeah, I've been talking about who this is for, who this is not, some of the testimonials, so I'm not gonna waste more of your time. I'm gonna go and give you exactly what we need, right? What you came here for. So this is the score method, right? This is the mechanism. So it stands scores, we stand for scan, create, optimize, remove, and elevate. Okay, those are the 5 moves that we base the entire system on, and then I'm gonna walk you through everything. That's what you're gonna be learning. So for scan, you're thinking of scanning your credit report. What are you really looking for? What do you need to do when it comes to this, right? Create, that comes into, do we need to build credit? Do we not, right? Which way do we start to be able to make that happen? The optimize, right? This is very clean, because this is how do we remove as many of the negative accounts inside of a credit report while also building all at the same time and optimizing, so the time in which all of these things are done. Because remember, when it comes to credit, everything it's timely, right? Time consuming. And when we talk about what the laws are, it literally says that everything in your credit report is called the Fair Credit Reporting Act. Everything in your credit report has to be 100% accurate, 100% verifiable, and 100% timely. The timely part of credit is the part that, one, nobody wants to really understand, but at the same time, it's the part that people really just want to avoid, and sadly, that's not the way it is, okay? So how do we optimize so that time that you have to wait, can we compress it into the fastest way for you to get into that goal, okay? And then R stands for removals, right? This is the happy part. These are all the negative deletions that we get, right? This is all of this part right here. This is deleted items, credit management, the collections, the charge-offs, the bankruptcies, the late payments, right? The credit bureau is giving you the confirmations that those accounts are being updated and removed, right? So that's what that stands for, okay? So now, and then elevate, right? This is the part where your life gets elevated, right? The life, the expectancy of everything that you've been wanting to, by not having bad credit, happens, All right, so without further ado, guys, let's just jump right into it. Okay, let's get into it. So phase number one, right, this is going to be the analysis, and I'm going to teach you fully how to find your credit report, look into your credit report, and how to look into what to do. Okay, so all right, so what do we do, right? So what is a credit report? Okay, so in case that everybody tells you, wow, yeah, check your credit reports, go to Experian, go to TransUnion. You know, the credit bureaus are three specific institutions. One is called Equifax, the other one is called Experian, you probably know that one a lot, and the other one is called TransUnion, right? These are the three main credit bureaus inside of the system. And these are the ones that have your data, right? They're the ones that show information. There are three individual institutions. And what happens is that whenever a bank, let's say Chase, Bank of America, to give you some names, what will happen is they will just pull out your information and they want to make sure that somebody knows that if they're giving you credit, it's somewhere so everybody else is able to have some leverage on you, right? So they pay the credit bureaus for them to report the information. And then funny enough, the credit bureaus also get paid by Chase, by Bank of America, whenever they pull your credit report again. And this is why there are so many errors inside of a credit report, because the three credit bureaus are literally for-profit organizations, right? They're individual institutions. They're here to make money, okay? So they will get paid whenever you want information, or the bank wants information to be given to them, but at the same time, they get paid whenever information is given out. So they really don't care, if you think about it, about what's happening with the information that they're being sent, because they make money anyway. So that's why we have so many errors inside of a credit report, okay? So yeah, so just a little bit of info, what a credit report is, right? That's pretty much like your school card. When you were back in school, or if you're in school now, right, in college or something like that, this is your school's card. This will show your entire payment history for the last 7 years. But then it takes into consideration the last 2 when it comes to building your credit score. Okay, so then how do we pull it? We use a main partner called Smart Credit. I'll probably leave you guys a link. I know that we have like a free trial or something in case that you do want to see a credit report and pull it out for yourself. So I'll leave you guys a free link at some point, or maybe just send me a DM or something and I'll send that over to you guys. But that will be able to give you a 3 credit bureau report. It will look something like this. Actually, let me see if I can find some data for you guys, and we can probably pull out a credit report together, and then we can go over what things are there or not. Okay, so that's how we're able to get a credit report. This is actually the cool thing about this, that it's a soft pull. Okay, there are 2 things. So everybody tells you, oh, don't get your credit pulled, don't get your credit pulled. There are 2 ways that you can make that happen. It's either a soft pull, and then also it's a hard pull. Okay, a hard pull, it's the one that you don't want. That's the one that you leave an inquiry. That's the one that you're confirmed somebody's going to pull out your information from the credit bureaus. Whenever it comes to these third-party apps called Smart Credit, I'll tell you, very, very reliable. The data is very safe, especially as well. What we do is that we do a soft pull. We get together and then we share some of your personal information with them. And then you as a consumer are the one that allows them to pull out that information. So that's why it's kind of like a soft pull. Okay, so what do we do? So we do a soft pull, we pull out the information, and then after that, we just go line by line inside of your credit report, and I'll give you an example right now. So what are we gonna be looking for? What are we looking for? How are we doing these things, right? And then from then, right, this is the phase 1, this is the analysis, how I was telling you. So what we'll be doing is, we will be going line by line. We'll check what your goal is. We'll check what is it that you really want to do. We'll check what is really happening. And then from there, we'll create that exact same plan, right? So that's going to be, okay, your credit's here. We're going to find out what happened with your credit. And then are these accounts disputable or not? And then I explain a little bit more why I'm talking about that now. But what are we going to be doing, right? If you were to jump right now, here's what needs to be done. Here's what needs to happen. Okay, so that's what it is. So that's the initial phase, the analysis, right? So we do the collection of the info, we do the soft pull, we do the review of the report, we find the negatives if there are any, and then we ask the story of what really happens, and then we'll build the plan right over. Okay, so this is an example of what a credit account looks inside of your credit reports. Okay, this I gave you 2 of the main ones that are more specific. This is Bank of America. This is a charge off. Okay, so what we're looking here, right? So we have the 3 credit bureaus information. We have TransUnion, we have Experian, we have Equifax. This is the account number. Okay, so we already see this is the number and name of the creditor, the name of the account. This is the account number sometimes. And just like that, just right now, you'll be able to see, right, that the account number is supposed to show in the three bureaus, but it's only shown on Equifax. So what does that mean? That is not, it's an inaccuracy. Why isn't it congruent? Okay, and then you get to see that some credit bureaus, right, have some of the data and some others don't. So these are some of the things that we're looking for, right? These are the inaccuracies that will make a credit report, an account, be able to be disputable. Okay, for example, date of last activity, right? If you get to see, I should have done the highlighter, but all right, guys. So just follow along with my mouse, all right? So date of last activity, so we have that it's November 6, 2023, but then in Experian, it shows that it was December 1st, 2025, and then Equifax shows that it was June 1st, 2025, right? How is it possible that the last time that something happened with this account, it's in three completely different dates, right? Also, the date that this account was open, for example, TransUnion has it that it's on the 13th of August, okay? And then there's the first, and there's the first, right? So inaccuracies as well. That the account was closed, yes or no. This is one of the main things I really want to look at, right? When you're looking inside of an account inside of your credit report, there is negative information, right? So this is the payment history of the account. Okay, obviously this is in colors, which just makes it really easy. Green means we're good. Green means that there was a good payment inside of the Experian report. So you see the line. Then another inaccuracy that I'm just finding out right now as I talk to you guys is, right, so you get to see the TransUnion says that it's not reported. So apparently there's no payment history on that account. How is that possible? Again, so we will be piggybacking on these negative accounts and these errors that they have in order to push them to do an investigation fully in your credit report. And this is how we will push for a negative account. Okay, so now something else that will tell you that this account is negative, for example, you already have the account rating, it's just derogatory. Okay, as soon as you see that remark, that just means negative account. We need to dispute it. We need to get this out. Another giveaway for you guys will be just the color grading, right? And the color palette. If it's red, it's bad. If it's anything that is not green, really bad. Okay, so here's an example. So you have 30 days late, 60 days late, 90 days, 120, 150. So this means there was no payment being made here, and then no more payments happen moving forward. And this all started on June and July 2025, and then it kept going into 2026 where it became a charge-off account. Okay, and if you don't know what a charge-off is whenever the original creditor of the account, in this case Bank of America, decides to just write it off the information, right? It says, hey, this person owed me, didn't pay me, I'm gonna file my taxes and I'm gonna mark it as a loss. And then the IRS gives them some type of kickback, right? Just like everybody else's taxes whenever something is given to them. And then we get something back just because. And then now the consumer it's in charge, and that account gets sold to collections, and now everything starts being collected. Okay, so that's a little example how that works. And then here's another example for you guys. This is a collection. Okay, a little bit different. In this case, it's from Credence. This is one of the, it's getting popular, this collection agency, but it's coming from TransUnion, Experian, and Equifax. Equifax has no data. So when you see something like this, it means that maybe the collection agency doesn't have a partnership with that credit bureau as a whole. So sometimes the original creditor is able, or a collection agency in this case, right, it's able to show information or choose who they want to report the information to, right? So it maybe they don't have a relationship with Equifax, or maybe they just never reported it to Equifax, or maybe the consumer maybe already did a deletion inside of this account. But this is kind of what you want to see. Again, pointers that you want to look into, right? Derogatory is the account rating, right? Anything that says derogatory is an account that is affecting your credit reports, okay? And then something really interesting, right? It's in the payment status right here. You get to see the collection charge-off status, so that already means it's a negative account. And then that it tells you who the original creditor is, right? So this means that T is a T-Mobile delinquency, and then T-Mobile hired Credence in order to be able to collect whatever money was left. Okay, and then if you guys want to have any extra information, if you guys really want to go deeper into all of this, I'll leave you this here, right? It says my 9,760 plus guide in 90 days. This is my own story. Okay, so if you want to go find that out, it's also on YouTube. You guys will be able to find it. So that's a little bit of how the analysis is. okay, what we'll be able to do. Obviously, there's a lot that goes into it, but I don't want to bore you just with this section, but that's usually how it is, okay? If you guys have any questions, again, just let me know, all right? So now, phase number 2 is the repair section, right? Remember, we're using the score method, okay? If you remember correctly, S is for the scan, hence the blue, and then now we're gonna go into create and seeing what's happening, right? So phase 2 is gonna be the repair phase. So what do we really do, right? This is usually a process that everything starts happening. So let's say we already analyzed your credit reports. So what's going to happen is, we're just gonna move forward. We find the negative accounts. We're gonna create dispute letters in order to remove those accounts. If the plan involves building credit, I have a section on how to build credit in a little bit, and I'll show that to you guys in a little bit. Let me see just to make sure. Yeah, so we have the credit built here. Okay, so I'll go there for you guys. And then now we're going to the repair section. Okay, so what do we do? So this is where we do the whole factual disputing. Okay, this is where we have everything based out of the Fair Credit Reporting Act, which I told you is the it pretty much says, to make it super simple, everything in your report has to be 100% accurate, 100% verifiable, 100% timely. What does that even mean? That means that there cannot be any errors inside of your credit reports, and if they don't have a way to prove it, it has to be removed. Okay, so that's what we leverage, right? That's why all of those mistakes that we were looking at in this first part are very important, right? Because in the letter, we're gonna say something like, hey, how is it possible that the 3 credit bureaus have that I opened this account, right? And it was open in 3 different days. How is this possible, right? So they're gonna have to do a full investigation and verify that that is congruent. If they don't have a way to prove it, it have to be removed, okay? Whether you owe the debt, yes or no, that's just the law, and they have to remove from your credit reports, right? And then if you start thinking about how your credit score is calculated, 35% of it comes from your payment history, meaning all these negative accounts, all these late payments, the charge-offs, all of that. You see that 30, 60, 90, 120 that I showed you earlier, it's what payment history is, right? So the more of those colored accounts you have inside of your credit reports, the what your score will be, just because 35% of your entire score comes from that payment history, okay? Next, you have 30%, it's your credit card utilization, and we'll talk a little bit more about how that goes into the credit building portion, okay? But just so you know, right, that's the laws that we use. We use the FCRA, which is the Fair Credit Reporting Act, how I told you. We have the CPA and the FACTA. So, you know, everything is there and everything is in laws. So that's what we use to leverage, okay? Now, the fact that there is law doesn't necessarily mean that just by reciting the law, right? That's not how lawyers work, for example. I just recite the law and then everything has to be done just because that's what the law says. You want to use a strategy around the law, and that's usually what we do with the dispute process, right? The FCRA has a lot of different sections, right, that we'll be able to talk specifically about how an account is be able to talk to you. I'm not gonna even go in depth in detail. I should have a full breakdown video on that as well, so go check that out in the YouTube channel if you really want to. I should have some information as well on the Instagram account for you guys to see fully specific what sections of the FCRA we're using, but just know that that's kind of like the main law that we're leveraging. So the way that we use that letter and that law inside of the letters is what is able to get the deletions, okay? And how do we have that entire sequence, right? For example, we will do an investigation first, and then we'll do a reinvestigation, then we will do a method of verification round, maybe a escalation or a threatening letter. These are different things and sequences that we will figure it out based on what your entire credit report looks like. We'll be able to create that entire plan for you on which strategies we need to do in order to remove that information, okay? So you know, so we're able to get about 10 dispute cycles, okay? That's usually the most that we will ever do for our customer, right? So that takes us to like maybe 10 months or so, but the average customer right now with us, at least for the last 16 to 18 months, their average change and deletion rate starts within the first 30 to 90 days, which is awesome. It's actually pretty awesome. So now, so I'll tell you, so we're doing 10 dispute cycles across pretty much an entire year. That's the most that we will ever do. But again, everything goes between the first 30 to 90 days. Some might see 30, some might see 90, some 6 months, right? It all depends on the goal that they're trying to do and how they're able to graduate. So if you're already, think about it. We started the video saying if you're at a 400, right, then that's somebody that would require a lot more an average than somebody that maybe it's at a 650 and they're just trying to get a HELOC for their house. You're trying to get a better rate. They're already qualified, right, to be able to get that loan, but they just want to get a higher boost into their score, so their interest rate is a lot smaller. And we can talk about that a little bit more. Okay, so that's kind of like how everything is when it comes into a disputing phase, right? And this is an example of how the dispute letters go. I actually have this right here, so I can show you this, guys. This is an example of a threatening letter that we're sending to one of the credit bureaus. Okay, so it says, and this is for you guys to be able to do this, right? So it has the date, it has your first name, last name, the address, the city, the state, the zip code. You will have which credit bureau it is and the address of the credit bureau. If you want to find that information, you can GPT it, you can Google it. The information is public, but something like this, right? This communication serves as my final attempt to resolve issues pertaining to inaccuracy on the credit reports. Okay, experiencing on section 616, 617 of the Fair Credit Reporting Act, non-compliance, potential harm, right? So you're starting to see how we're able to leverage. We're also using a lot of storytelling in our dispute letters, and I can show you a letter how that looks in a little bit. But you want to show them, and also at the same time give them like, hey, this is the law, you're not doing this needs to come off, right? And then you'll be able to show what dispute items are here, right? You will show the name of the creditor, the account number, and then what the error on that account is. And here's how we start using the leverage, right? So in accordance with section 609A, right, and 611A in the Fair Credit Reporting Act, I have not yet seen original documentation confirming the accuracy of these items. Okay, so these are things that we'll be able to do here. And then after all, you tell them what you want them to do. And then, hey, I need you to remove this information, and then, just sign off. Usually what we do with dispute letters, and if you want to do it yourself, right, you can start using letters like this, just so you can start expressing everything, right? So first you will do an investigation. Hey, these items are inside of my credit report. I need you to tell me what's going on. I need you to verify that everything is 100% accurate, 100% verifiable, 100% timely. Okay, and then you can use a letter like this same exact structure. Say something like this, right? And if you don't know, maybe you can just GPT it as well, right? So hey, I want to send an original dispute investigation to the credit bureaus, and then you can do that. Okay, for us, we don't use AI. Everything is pretty specific and tailored to the customer's goals and ideas, and we use these strategies specifically based on the stories, right? That's what we like to ask. Hey, what happened with this account? How did this happen? What really happened? And we go into that story, so we're able to use the actual factual information of what happened with that account, so we can able to remove the information from the reports themselves. Okay, so yeah, use this. You'll be able to come back into it if you really want it. You can pause it, you can rewind it if this is not specifically. Send me a DM. Okay, send me a DM. Danny, I didn't understand this, and then I'm pretty sure I have a bunch of videos about how to dispute information more in depth, just so I don't take too much of your time right now. Okay, all right. So this is Smart Credit, by the way. This is that partnership thing that I was telling you about, where you'll be able to pull out your credit reports. It should be fairly easy. You're just gonna here sign up. Okay, and then right away you will be able to just get some of the information from there. And then, okay, obviously for me right now, I already have the entire account, so that's kind of what it will be. And this some of the prices. If you have the 7-day trial, I'll give you a link for a full trial, so all of that can happen for you. Okay, all right. So back to this. All right, so then this is an example of how the type of responses, right? Because whenever you send a dispute letter, you're starting a dispute process that is going to happen via mail. Okay, why do I like mail? I know some other companies go digital and stuff like that, but when you go digital, you let go of a lot of the laws that protect you as a consumer. Okay, so what you want to do, you still want to do a snail mail. I know it sounds crazy, but you can use dispute strategies like maybe send certified letters, right? So you can always backtrack whenever the credit bureaus receive that information. But what will happen is, because you're going through this mailing process where you're going to send a letter, they're going to send you a response based on what the investigation it was, whether it is from the bureaus, whether it is from the collection agency, or whatever it is. You're going to start seeing responses on the results of those investigations that they're doing. So here's an example. Hey, dear Robert, right? Our office has received your letter, dispute, request verification. Please advise these accounts have been closed and returned to our client or clearance. So eventually, Additionally, we have requested this account to be deleted from any consumer reporting agency files to which we have submitted information for, right? So this just confirms that they stopped reporting the information to the credit bureaus, meaning it was deleted. It's not gonna come off into the customer's credit reports much longer. And then you'll be able to see this is some of the changes of what happened whenever an account gets removed from the credit reports, right? So this is 7/08/2024, and this one is 9/26/2024. Okay, so you see the difference on how the dispute process, and this was from Carmelita, really nice. And let me see, this is also from 2024, and then this is from 592, and this is just like 1 month away, right? And you see a difference on what deletions actually make, right? Because if the accounts are negative, how I told you, if it goes into your payment history, 35% of your score, and a lot changes when those accounts start removing, okay? And here's some of the strategies and how everything it is. And actually this is pretty updated up to the last couple of months. So you get to see these are like rounds. This is our round 2. These are bureau letters that we sent out. This is how we're able to track everything. Everything that we do for you guys is tracked in this case. And obviously I will advise you, if you're doing this on your own, you should track the responses and everything that is happening when it comes to your letters, right? So for example, this is our round 8, somebody that is in round 8, this is our round 1 results. Let's see how this went. Somebody that got 2 accounts deleted, 1 wrong address, right, deleted, and then 1 account repaired. An account repaired means that the account is maybe still open, or maybe it's fully closed and it only had like some pockets of errors, like maybe just some negative items there, but the overall of the account is good. So we just target those specific deletions. That's what a repaired item is. Whenever an account is fully deleted, it will be kind of like this MCM letter for this Montclair account, for this Robert customer. And what will happen is the account will come off fully from the credit report and it will disappear from the entire credit report, okay? So yeah, this was, let me see, this one round 3, you got 6 accounts deleted. This one is 8 accounts deleted, 2 deleted, right? And these are all recent as of May, this last month, okay? We're in June now. So this is all data from this last month. So you get to see some of the customers, a lot of them started getting first deletions, right? In the first 35 days, 35 days, 9 accounts deleted, 5, 7. So this is really good. So guys, do a dispute process, okay? Especially if you have negative accounts. This is going to really help you, because that's where all these negative accounts get deleted, okay? So again, if you go back to the beginning, this is what a regular credit repair company would do. I don't know about the results as a whole. Hopefully everybody is doing that, is purchasing their services, is getting this type of results. But this is what the main portion of the entire process is, right? This is where the scoring method becomes really powerful, right? This is the building section of things, okay? Let me get a little bit of water here so we can keep going for you guys. Awesome. So this is the build section, okay? So here's where, yes, remember I was telling you about the car, where we do the negative items are all the brake, and then the positive lines are the gas pedal. This is us putting the foot on the gas, right? If you guys go back here, right, let's say if somebody, think about this, if somebody has 12 accounts inside of the credit report, but then all 12 of them are negative, that means that both of our foot and our feet are in the brake pedal. But if we remove 9 accounts in the first 35 days out of those 12, that means that now that credit report is very thin, there's nothing in there, right? So we're not going anywhere. This is when the building section comes into play. And then what we do in this section, right, is the whole build optimization. This is the whole creation of credit. And for somebody, right, again, if you remember thinking about this when we were talking, right, it's been 38 minutes already talking about this, but when it comes into nobody gives you credit because your credit is too low, right, what that means is a regular banking institution, it's gonna see a 500 credit score, a 400 credit score, and the chances for them approving you for credit are very low, just because that's too many things in there, right? So here's when we start building, right? So this is when we go into secured credit cards, secured loans, the ones that I really like and I really love, and I'm giving you some examples here. They're called Self, Chime is a really good one, Kovo, Ava. These are really good companies, and I have an example here for you guys, right? I want you to go, and I really want you, if you have nothing positive in your credit report, what I need you to go right now, I should pause this video, go into the site, right there, open a new tab, go into this, and I want you to apply for a self account right now. Okay, our self account is gonna cost you maybe like 20-25 bucks a month. It's gonna be a savings account pretty much, where you're gonna be putting money. You're gonna be putting, let me see how much are they charging. It should be like $25 for a self account. Let me see, let's get started. Let's go here, products, self credit builder. Okay, so the self credit builder, right, it's a loan in a bank held certificate or deposit CD, and what it's going to be doing is, and this is awesome, right? So it costs you either 25, 35, 48, or 150. Honestly, the sweet spot for me is the $25, $35. You're just getting started, just to make sure that you're able to make those monthly payments. Okay, so here's what it is, and here's how it's going to work. You're going to download this app, you're going to get it. And what is going to happen is it's going to charge you $25 every single month that are going to go into a savings account. And what Self is going to do is that they're going to report, like if they gave you a loan for, let's say in this case, the $25 is $600. So Self gave you a $600 loan, but in reality, they're just reporting it that way. And every single time that you put $25 into your savings account, okay, with them, they're gonna report it like if you made a payment for that loan. And then the sweetest thing about this program is at the end of the term, right? Usually this one goes for 24 months. So at the end of those 24 months, they send you a check back with all the deposits that you made, and then your credit is fixed, everything is there. Again, the whole point is to show that you're able to make payments, right? Payment history again. So this is a sweet company, and I still have one of these accounts when I was building my credit. So this is more than anything, this is a really sweet thing for you guys. So please go ahead, do it right away. And then the next one that I have for you guys is called Kickoff. Same principle, but in this case, what this account is going to be doing, it's going to be the same. You're going to be depositing, let me see, I believe it's $5, $20, and $35. Perfect. And what they're going to do is that they're going to show like that you have a credit card, okay, for $2,500. Now, why is this so big? Okay, this is huge because remember how I was talking about the 35% of your payment history? 30% of your entire credit score comes into your credit card utilization. And you have never heard of credit card utilization. What this is the amount of balances that you owe on your credit cards from a month-to-month basis is what your credit utilization is. So let's give you an example, right? If you have $1,000, what you do, especially with a revolving credit card, what it is that you have a limit of $1,000. That means that you have $1,000 that you can spend, right? But then if you use 500, now you use 500 and then you got an extra 500 to be able to use. But then if you pay 400, now all that recycles, and then now you only owe 100 and you have 900 you're able to use all over again, right? That's what a credit card is. And you're able to recycle that $1,000 limit on and off depending on how much you use, how much you pay. That balance between what you owe, between what the limit that you have, is your credit card utilization. And the rule says that you want to have your credit card utilization maximum 30%. But in reality is the sweet spot that we teach our customers is 5 to 10%. Okay, why? Because what's better than 30%? 20%. What's better than 20%? 10%. What's even better than 10? 5. Right? So it's a sweet thing that you're able to use and you're able to leverage. And one of the main things that I really want you to understand, once you understand that your credit card utilization, it's 30% of your entire credit score, and that's the only thing that you're able to control that will really affect how your scores move from one day to the other. Okay, so that's why it's so good, right? So again, now with this, we're talking about this building section, okay? And if you have never had any type of credit, or if your credit is really ruined, your credit is really at the bottom, that 400, that 500, start with a secured credit card, a secured loan. I would really go for either a Self right away, how I told you, or go for Kickoff right away. If you're able to add the two of them right away, that's a good increase in points of about 40 to 60 points. Just by adding that and paying what, 25, 50 bucks a month, I think it's definitely worth it. Okay. Now, if you already have somewhat of credit, I still advise going into this ones. But first, let's say that you already have a credit card with like maybe Capital One. It's one of the ones that they give you, a simple one. Go ahead, just bring down the balances as much as you can in that, and then still add one or two of these accounts, okay? Because what it happens is it just keeps adding more strength into your credit report. And then if we're thinking about the business funding section of things, what is going to happen is they're going to start seeing how much are you able to leverage on your personal side in order to push into your business credit side. And then we'll show you a little bit of how that goes. Okay, so here's what the credit build is. Okay, this is something that we do specifically for customers if they don't have anything, especially if they're on the negative side of things with their credit. We start with some secured building options, and they're pretty much guaranteed unless you have defaulted on a secured line of credit before. If you haven't, so yeah, well, again, we'll revise everything onto your credit report and we'll see how everything is. So just check on those things, okay? Because it's really, 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 really important, and it will really help you a lot. Okay, so what do we do if we do an analysis, right? So do the analysis, go through here, and then find out if you need to build credit or not. A good strong credit report, so you know, has 10 strong lines of credit inside of the credit bureau reports. Okay, so whether that is a mortgage, a car loan, 5 credit cards, things, whenever you think of a strong credit report and a strong credit profile, you need to have at least 10 accounts that are showing that strength. Okay, so all right, so something that nobody talks about, and this is really good, a lot of people use it but they don't know really what this does, and it's an authorized user trade line. Okay, this is you piggybacking on somebody that you know, that you trust, right? Usually you want to have a family member, right? Your spouse, maybe sometimes even if you're already on the older side, one of your sons, children, right? That you'll be able to leverage their credit. So what you're trying to do is have a full line of credit from somebody that has had no late payments ever, and they have a big credit line, right? So let's say if I were to have a credit card for $10,000, for example, and I wanted my wife to piggyback out of that account, what we will do is I will add it as an authorized user, and what it will happen for the credit is that exact account, the entire payment history, the credit limits, all of that information that it's there will also show inside of her credit reports, and it's going to boost. Remember, payment history and credit card utilization, those are going to show in her credit report, and it's going to skyrocket her credit. Okay, so this is another one of the things that we use when you're trying to build credit, and I want you guys to use it. Leverage. Ask that family member, hey, do you have a credit card that I could use? I'm trying to buy a house. Okay, so use that. Okay, the whole goal of this entire credit building section, right? Remember, the repair part is going to take, right, months and months of you disputing, but at the same time, while you're waiting, you want to build the credit as well. You can do those things simultaneously. It's strategically just how I'm telling you about. Maybe add 1 or 2 secure credit cards in the beginning, or a secure credit line product, bring down your credit utilization, and then maybe get an authorized user right away. Okay, just those things right away, and it's mind-blowing how your credit changes just with that. And then if you add on top of everything that you're building, deletions from the negative accounts, chef's kiss. Okay, that's the strength of the score method. That's how important it is for you to do all these things in the right time, all right? And the whole goal, obviously, optimize the score and the profile so you qualify for what's next, whether that is a mortgage or whether it is the business funding that we will also be talking about. All right, so here's the entire thing. So assets depth, secure credit cards or builders, utilization plan if you have credit card utilization issues, right? If you have debt, maybe we can look into whether we can use a personal loan, or if we can do a debt payment down strategy, or allocating more money to this card, and then we can do that as well. So think about these things, okay? And then after that, we will go into an unsecured card. That's when our credit maybe hits at 600, at 650, and then how we can start letting go of those secured lines of credit, and we start really getting real credit cards, real secured cards, so we can start building everything. And then, how I told you, we will look into the authorized users, and then we will optimize from there to get into those 10 lines of credit that I told you that will be the most beneficial thing. Okay, and if you guys wanted to really see what is that we use Kickoff, we use the credit builder cards, we use Self, we use Kovo, Ava. Okay, sometimes rent reporters. Oh man, there's so many good things here that you guys can use moving forward. Okay, and just so you know, look at the difference. Okay, this is really awesome. This is an example that I have here for you guys. Okay, this is the difference from 1 month to the other from credit card utilization. As you guys can see, I highlighted the balances. This is a customer that had a 713 all around. And then we have a 4,653 balances out of a 6,600 credit card, right? So almost a maxed out credit card. No payment history. Payment history was good, no late payments, but just balances alone, right? Once we're able to bring down those balances down, look at the difference. It went from a 713 to a 778 just by bringing down the payments on the card. And then guess what else happened? Because we paid all those balances in a timely manner, and because everything that we did, the creditor actually increased the credit limit of this credit card, right? You get to see from 6,600, now he has even at 7,100, so they increased it $500 even more. Okay, so this is the power of credit utilization. This is the power of knowing strategies. This is the power of knowing that this is possible. And I want you to understand and see that this is really good, and this is what you want to do, right? Focus on your payment history by disputing. Focus on the credit card utilization, okay? If you don't have credit card utilization, or you don't have any credit cards yet, start with secured building lines of credit. Once you get into the unsecured sections, then focus on your credit card utilization so we can get this type of credit scores, okay? This is really good. All right, let's keep going. All right, let's keep going. I actually hit pause. I had to get a little bit of water, guys. Sorry about that. So, all right, let's see this. So just so you know, again, assets depth, secured lines of credit and credit builders, utilization plan, unsecured cards, authorized user train lines, and then you want to optimize everything. That's kind of like that step. All right, so let's keep going. So that's the build section. Okay, now we're gonna go into, oh man, this is gonna be so awesome. So, all right, so think about this. Let's do a little recap, right? So we've done the scanning, right? We've learned how to do everything inside of your credit reports, how we're gonna find the information, what do we really look for, okay? Then we're gonna go into the create and the repair section, okay? This is when we're gonna enter fixing, right? With the disputes, with the negative accounts, what negative things we're looking for. We're gonna look for dispute letters, right? How do we send this? And these are the results that we're going. Then we're gonna do into the credit building phase, all of this together. And then now, this is for all of you guys are maybe in the early 600s, trying to get into business credit, trying to fund your business. How do you do that? Okay, and this is part of the entire optimization phase, okay? This is when, if you really are into a full business owner, right? This is for consumers, right? This is for the regular consumer. This is how we're trying to get a house. This is how we're trying to get everything. But here's how you really get funded, okay? These two options are gonna be sweet for everybody. Because once you finish all of this, right? Once you finish building, once you finish analysis, once you finish the repair section, that's when you're able to qualify, right? If you already hit a 600 scores and you have remove most of the negative information inside of your credit reports and you have built some of this credit, you're most likely, and I cannot say guarantee because it's against the law pretty much, but if you follow these 3 steps right here, the analysis, the repair, and the credit build, after 4 months, you should be able to qualify for a home. Okay, and if not, send me a DM and then I'll look into everything myself. You know what? For anybody that is watching this, I'm just gonna go ahead and if you watch this, DM me score, and I'll give you a free analysis of everything that I'm doing right now, just to make sure that I'm able to give you the full plan, just like if we were doing it, right? So yeah, I said it. So let's go ahead, make that happen. DM me score and Instagram, and then you will get a full credit repair analysis, and I'll tell you the full plan of what you need to do. Okay, but again, honestly, by this, within the next 4 months after watching this, and I want you to implement this, okay? I don't want you to be that person that just watches the entire video, the entire training, right? We're doing a full credit repair training system, full giveaway of everything. So I want you to implement these things, and then I want you to tell me, you know what, Danny, this thing was awesome and you helped me out, okay? Nothing in return, all right? So now this should be able to get you into that mortgage that you're looking for. But if you're looking into business credit, if you're looking into how to get funding for your business, how to get those big credit cards and stuff that you're able to get your business moving forward, maybe you're starting a business, maybe you want to get more funding for payroll for your business, this is when the business credit thing starts sweetening up everything. Okay, this is more triggered to like, all right, I'm at a 650, 600. How do I get a business credit card of $25,000? How can I get 3-4 of those, right? How can I get $100,000 of business lines of credit? So with 0% APR, so I can just continue funding my business for the next year and I don't have to worry about paying that back in the next future. Okay, so the way that we do that, okay, once you have a solid, strong personal credit, right, you're already getting into that sweet spot, that 650, 680, 700s, that's when we're gonna start leveraging and setting up a business for you to be able to go if that's the route that you want to do, right? Again, this is for the clients with an LLC, for the 1099 billionaires, businesses who want to get fundable through business credit, right, in those last 2 years especially. So I'm going to teach you how to build business credit super fast. I know that this is full about credit repair and stuff, but I want to make sure that I'm able to cover all the grounds for everybody that is watching this, right? Fix your credit to buy a home. I already told you how to do that. Fix your credit, and now I'm going to tell you to fund your business. I'm going to tell you exactly what you need in order to make that happen. And then if you really wanted more extra funding, then I'll give you an extra slide there. Okay. So whenever it comes into business credit, right, what you want to do is that you want to set the proper foundation. You want to make sure that you want to have an entity, whether that's an LLC or an S Corp. You want to make sure that you get your EIN. You want to make sure that you have a DUNS number, okay? A DUNS number, DUNS and Bastry, and this is very, very, very important, okay? The credit bureaus that we talked about on the beginning for the consumer side are completely different from the ones that we're doing to business, and I need you to look into that. But the main thing that you want to take into it from here that I want you to know is that go ahead, go into dunsandbastry.com right now. If you don't have a DUNS number for your business, go ahead, it's free. Go into Duns and Bastry, get a free DUNS number, and that's what I open up your business to be able to have business credit reports, okay? Then from there, I want you to open up some net 30 accounts, so net 60s, okay? So these are gonna be kind of like the secure cards that I was telling you on the credit repair side of things. I would like the Self, like the Cobalt, Credit Strong, okay? You're gonna do the exact same thing, but for your business. And these are the examples that I want you to do. Going to Credit Strong, going to Wawa, going to Uline, going to KeyBank, Granger, right? And then that's where I want you to build, okay? Those accounts, you're gonna be able to use your EIN number instead of your social security number, so you'll be able to get this lines of credit for your business. And, go based out of that, okay? Super, super sweet, but these are the steps, okay? The foundation, most important thing, once you have those done, go into this little accounts that I'm telling you about, get them, get maybe 3 or 4 of them, make your payments on time, and that's it, okay? Very, very important. Here's how Dun & Bradstreet looks like, by the way. This is very important because once you start looking into business credit, that's when all the extra scores start coming into play. I have a full video on business credit if you really want it. Go into YouTube, and it goes really, really in depth into what all of this is, what your paydex is, what your delinquency scores are. But this is so you know your business is able to have credit as well, and they're able to have credit reports as well. Okay, so very, very important. Okay, and again, focus on your fundability. Okay, you want to make sure that your business is fundable. Okay, and with that being said, guys, I don't want to go too crazy into the business credit side. I do have a lot of trainings into this, so go into the YouTube again, go find, send me a DM, right? And we can talk about your business credit as well. We can talk about business credit stacking sequences, but I want to focus this entire training into credit repair. Okay, I want to make sure that you understand how to fix your credit, what can we do to fix your credit, and what can you do yourself to fix your credit. Okay, and once you have your credit fixed, then you'll be able to tap into this world of business credit if you're trying to go into a business, or even better, you want to do the full funding sequences, which is why you're able to get either term loans, okay? A term loan in comparison to like the business credit cards is that the business credit cards is how many credit cards you can get at the same time with at 0% APR, and how you're able to try to get money. This is an example of how we do this. But then at the same time, and here's an example of somebody getting a $25,000 credit card just by using this. Is back in 2020. And then this one is a little bit later, and this is from Citibank actually, right? Somebody got $15,000 just from this. I showed you in the beginning, where are they? Here, how our customers are able to just get all of that, right? So this one got $18,000 as well. So that's what business credit, that's what fixing your credit will get you into. And I want to make sure that you have access to all of these things, okay? So, and besides that, right, this is where the real funding happens, right? This is when, if you have a business, you're gonna get all these credit cards. If you have a business, you're gonna get all these type of loans, right? For example, this is one of our customers. Hey, good afternoon, Danny. I just want to let you know that our company, Pacific Prime, will be able to qualify for $140,000 at 9.75, right? This is a business line of credit that they'll be able to get. So think about it. This is what it can do for your business, but for you as a consumer, that means that you're able to get that mortgage. You're able to get that card that you already have, or you're able to change that card finally for everything that you need. You're gonna be able to get that house, right? And we're going back into all of our testimonials and things, guys. So again, the score method, okay, very strong. This is what I pretty much just gave you everything, how we're able to do this for customers, okay. Scan, right, look into your credit reports, find out what's wrong, find out what's derogatory, find out what's there are collections, find out if there are late payments. I give you examples. Go back into the video and give me that, or send me a DM again, and I'll be able to kind of walk you through everything that we're doing, right. Create, right? I want you to create the entire strategy for yourself. I want you to look, okay, this does not make sense. This is an error. It's not in the 3 credit bureaus. What's happening here? Use that, take notes, and have that, because once you write that dispute letter, I want you to be specific. Remember, we're doing factual disputes, okay? Now, then we're gonna optimize, okay? I'm going again, this is the whole mechanism, guys. This is what I use for myself. This is what I use if my family members were to come here. This is what I use for my friends and all of my customers. And this is how we got all these crazy results, guys. This is every single time that I see this type of things, and this is just a little bit of all the stories that I will be able to tell you, but we're about to hit an hour in this training, so I don't want to make it too crazy. So guys, if you guys have any questions, okay, anything about this entire method, okay, whether it is finding out how your credit report is, how to create your full plan, how to remove those negative accounts, how to optimize your credit report so you can get fundable. Okay, one thing is having no negative accounts, another one is be able to get qualified for a mortgage. Okay, if you're looking for a mortgage, text me, DM me, Score, and I'll give you all this information for free. You'll be able to get a copy of this. I give you a full free consultation where we'll look at your credit reports at no cost. We'll pull out your credit reports together. We'll be on a Zoom just like this. We'll get together into it, and I'll show you everything that we need to do, how to remove it, how to take it away, and then that's it, guys. So awesome. I mean, we did it. I gave you everything. This is the entire Score method. How do we do it? How we make everything happen? How do you get results for these people? So guys, if you want to be part of those 779 lives plus DM me the word Score, I'll give you a full 3 credit bureau audit. If you guys have any questions, even if it's just for me to see what you're doing already with your disputes, just DM me and I'll be right there with you guys. All right, so have a great night. I'll see you guys soon.